Picture a classroom. 20 kids, one teacher, and a jar sitting on the desk. Every Friday, the teacher asks each kid for 1 coin from their allowance. Nobody wants to give it up, but by the end of the week, the jar is full. With that money, the teacher buys crayons for the class, new books, a first aid kit, and paper towels for when someone spills juice everywhere. No single kid could buy all that alone. But 20 kids giving 1 coin each? Now the whole room has stuff nobody could afford on their own. That jar is basically government. The coins are tax. This video is about how that jar works, where the money goes, why some people pay more than others, and why some people pay way less than you'd think. Here's the basic idea. You get a job. You do the work. You're supposed to get paid $500 at the end of the week, but you don't get all $500. You get less because some of it disappears before it ever reaches you. That missing part is tax. Nobody likes it, but almost everyone pays it. So where does that money go? Think of a giant tank in the middle of your city. Every paycheck sends a little stream of money into that tank, and pipes run out of the tank in every direction to schools, hospitals, the people who fix roads and put out fires, roads, police, firefighters, the military, hospitals, even your grandparents' pension. None of that runs for free. It runs on the tank, and the tank only stays full because everyone keeps sending money into it. Now here's something people don't realize. There isn't just one kind of tax. There are several, and they hit you in different spots. Income tax comes straight out of your paycheck. Sales tax gets added when you buy something, like a coffee. Property tax is what you pay every year just for owning a house. Capital gains tax kicks in if you sell something for more than you paid. Say you bought a house cheap and sold it for way more. That extra money gets taxed. Corporate tax is the same idea, but for companies. Tariffs are a tax on stuff brought in from other countries. Different pipe, same tank. Here's the part that trips almost everyone up. Tax brackets. Say you earn $100,000 a year, and the top tax rate where you live is 22%. Most people think that means the government takes 22% of the whole $100,000. That would be $22,000. Wrong. And once you see why, it actually makes total sense. Picture your money getting poured into buckets, one after another. The first bucket holds your first $10,000. That bucket isn't taxed at all, zero. The next bucket holds the next $40,000. That one gets taxed a bit, say 12%. That's $4,800. Only the very last chunk of money, the last $50,000, gets hit with the higher 22% rate. That's $11,000. Added up, $15,800, not $22,000. You only pay the higher rate on the money above a certain point. Never on everything you made. Nobody's whole paycheck gets taxed at the top rate, just the last slice of it. How does the government actually collect this? If you work a normal job, it's automatic. Your boss takes the tax out before you even see the money. If you run your own business, you have to report your earnings yourself and pay based on that. Paid too much during the year? You get money back. Paid too little? You owe the difference. That's really it. Everything else is just paperwork. What happens if you just don't pay? At first, nothing scary. You get a letter, a warning. Ignore it, and interest starts piling up, so you owe even more. Ignore that too, and the government can start taking money straight from you. Keep ignoring it, and in serious cases, it can end with actual criminal charges. Nobody starts there, but that's where it goes if you keep ignoring the bill. Not everyone pays income tax. Kids don't. People who aren't working don't. Charities usually don't either, but almost everyone pays something. Even a kid buying candy is paying sales tax without even knowing it. Now here's the part that actually makes people mad once they learn it. Rich people don't usually pay less tax by cheating. They pay less because the rules treat certain kinds of money differently. Remember capital gains, the tax on profit from selling something? That rate is usually way lower than the tax on a regular paycheck, sometimes almost half as much. So if your money comes from a normal job, you get taxed at the higher rate. But if your money comes from stuff you own, like stocks or property, a lot of it gets taxed at that lower rate instead. Same dollar, different pipe, different rate. There's another trick called negative gearing. Say someone owns a rental property, and it actually costs them more money than it brings in. That loss can be used to lower their other taxes. Meanwhile, they're betting the property gets more valuable over time, so they come out ahead later. None of this is illegal. It's just built into the system. And it quietly favors money that comes from owning things over money that comes from working. Tax rates aren't even the same everywhere. Some countries take a huge cut. Finland takes around 57%. Japan isn't far behind. Other places take almost nothing. The Cayman Islands and Dubai don't charge personal income tax at all. That's exactly why so many rich people and businesses set up shop there. Same idea, very different jar. So here's the honest version. Tax isn't a punishment. It's the coin in the jar that buys stuff none of us could afford alone, like roads, hospitals, and schools. The system isn't perfect, and it doesn't treat everyone the same. How much tax you pay depends a lot on where your money comes from, not just how much of it there is. But underneath all the brackets and buckets and pipes, it's the same idea from that classroom. Everyone puts a coin in. Everyone gets something back they couldn't have bought alone. Most people just never got shown how the jar actually works. Now you have. Most financial things aren't actually complicated. They're just explained badly, and that's what this channel is for. If that sounds useful, subscribe. It takes 1 second. See you in the next one.